Thanks for staying with us. 34% of households in South Africa are forecast to fall out of the middle class. This is according to recent data from the financial services company Transaction Capital. Now, the COVID-19 pandemic, weaker economy are all major contributing factors. Let's chat some more about this now with economic and consumer analyst Professor Bonke Dumisa, who joins us virtually. Professor Dumisa, thank you so much for joining us. Some really alarming conversations we've had over the last hour or so. We've heard from an energy expert about the rising cost of energy. We spoke about the affordability index that says that the price of a basic basket of food goods has gone up more than 300 rand since just September last year. And that, of course, is looking at families that are in lower income brackets. Now we're looking at reports that those that find themselves in the middle class might have to join those in the lower income brackets because they are just not making ends meet. What is your view on the state of South Africa's middle class in terms of how they are able to keep food on the table during this time?
Good morning, Marcel. The state of the debt environment in South Africa is very worrying, but it is not entirely because of the economic situation. There are other issues beyond that. Let me give you some quick statistics. In South Africa, we have more than 23 million people, individuals, who have got impaired accounts. That means they can't really pay and regularly their accounts. They are left behind because they cannot afford to do so. And yet we find that we've got over 85 million people with credit active accounts in South Africa. So which means on average, an average South African has got more than one credit account. That is the beginning of our problems. Because when you look at our inflation rate, our consumer price index in South Africa, it has just risen to 4.2%, which is really midway between the target inflation rate of 3 to 6%. So it means we do not necessarily have an inflation problem in South Africa, and yet we've got a high cost of living. So what may be some of the problems which have affected mainly the middle class? The administered prices play a big role there. Why? What do I mean by administered prices? That's where the government can interfere when whoever wants to increase the prices says, no, this is too high. That's electricity. We know about Eskom coming up with over 15% all the time. Water to a certain extent, property rates, and of course some relatively high food inflation and relatively high transportation inflation. Why am I saying the middle class may be affected more by administered prices? Most of the middle class moved from the townships, black townships, if we can put it this way, or just townships, where the rates are low. In fact, in many of them, you don't even have rates. And they moved to the suburbs where the rates are high. Now they had to add those costs, which they didn't have before. Because they've got more gadgets where they live now, the costs are very high relative to maybe to most of the township environments that they came from, and property rates, as I said. But there is another element which is self-made, which affects many middle-class people, consciously or unconsciously. I think in South Africa, regrettably, we've got a very high level of conspicuous consumption. What do I mean by conspicuous consumption? Doing what the Jones are doing next door without really knowing how deep their pockets are. When you look at the number of cars we drive in South Africa, yes, everyone deserves to be happy, but the most expensive ones, do you know that in South Africa we've got more Mercedes-Benz than many other countries outside Germany. And big houses, everyone wants to live in a big house, but how many of us really live in the mansions that we cannot really afford?
Now, Professor, if I could just come in there for a second. You're speaking, I think the point that you're making is that many South Africans are not able to afford, they're living above their means, as it were. But,
yes.
But if we look at how these figures have spiked in such a short space of time, we're looking at families that perhaps a year ago would have been living within their means, and now all of a sudden they're not. I mean, I've heard the saying that too many families are one paycheck from being out on the street. What do you think the repercussions then should be going forward? Do we need more financial education so that we don't find as many families or South Africans in distress when we have a crisis like COVID-19 on top of a struggling economy already?
That's a very good question. And that's where the problem is. When we look at the number of people who actually started having impaired accounts in the second quarter of last year, in 2020, when we had just come into COVID and everything had been shut down, we find then that over 779,000 people had their credit accounts impaired because of COVID. Because during that period, most of them found then that maybe they were on short-term work. They could not work every day, so their pay came down, and many of them lost jobs. You remember that we lost more than 2.2 million jobs during last year because of COVID. And you've added then that whole issue of now people having to pay for more people outside their core families because many people were affected by that. So that's why I was saying you've got many serious problems which are COVID-related and related to the economy. But you also have many other self-caused things which they could do without. Now this takes us to the point that they're trying to push me to, that it is time for South Africans, maybe at least during these COVID days, that we have got to start distinguishing between what we really need as a family and as individuals, which we can afford without resorting to credit, and what are the things that we want. So many people confuse what they want, the things that they can really do without, with their needs, and that compromises them, because you can find that something which you need, you can get it at about 25 rands, but if you buy what you want for that very same product type, you may find yourself paying 80 rands. Those are some of the trade-offs we have to do now in life. And because it is scary when you look at the credit levels in South Africa. You know that most South Africans, at least over 3 million of them, have got more than 2 credit accounts. And the more people take credit, the more they put themselves into this debt trap. And that is where most of the middle class are caught as it is now. They do not know to get out of it. And the government has tried through the National Credit Act to limit the exposure and granting of credit. They came up with Section 88 and 81 of the National Credit Act, which limits reckless lending. But people move out of the normal sector then, where it is regulated, and they go to omashonisa, the illegal credit lenders. And those are the people then, there's no law. I've seen certain agreements where a person agrees that they will pay 30% per month. I mean, that is really illegal. But if we go to omashonisa, you get that thing. So that's why then I am saying, especially the middle class, they must limit the things which expose them to this debt trap. I'm not saying it is unavoidable for most of them, but for some it is avoidable if ever they can reprioritize their expenditure patterns and their needs analysis on what is it that my family cannot do without, and what is it that my family can do without, at least for now, whilst we are facing these COVID times.
Difficult decisions indeed being faced by so many families right now. Economist or economic and consumer analyst there, Professor Bonke Dumisa. We thank him so much for his time this morning.